Hello and welcome to this quarterly update with SKAGEN Kon-Tiki. 2019 started so well for the emerging markets and SKAGEN Kon-Tiki as well. And then the uncertainty hit us. Portfolio manager Fredrik Bjelland, how would you sum up the third quarter for your fund?
I think after we'd had a fairly good rebound in the first half of the year, much of which was a reversal of a weak fourth quarter in 2018, I think what we've seen in the third quarter has been a resumption of uncertainties, particularly related to global trade. We had Trump launching new tariffs on China on the 1st of August. That was followed up by the currency manipulator label, and we've since seen some retaliation from the Chinese side as well. What's becoming increasingly clear is that this is having a spillover effect on the global economy, which has increasingly been priced in by the markets, hence the weakness.
What factors would you say have impacted the returns in the fund the most? Are we talking trade wars or company-specific factors?
Well, clearly a slowing economy is not good for many of our stocks, but of course they've hit our cyclical exposure, particularly within oil and gas and commodities quite hard. However, I would stress that the majority of our performance comes from company-specific events, both good and bad. If we look at the detractors, one of the biggest detractors during the quarter was Turquoise Hill Resources, a Mongolian copper mine operator. There, an expansion project is both behind schedule and has a significant cost overrun, which has clearly nothing to do with the trade war. On the positive side, we've had very strong performance from three of our Brazilian holdings, Marfrig, Rumo and Kusan, who operate in completely different sectors, have all performed strongly as they've solved some company-specific issues that have previously held back their valuations.
Looking a bit ahead, in your view, what would need to happen for the emerging markets to close the gap to the developed ones?
Well, I think in the short term, any sort of normalization of risk assessment will be beneficial to emerging markets, which tend to trade off quite significantly when people are in risk-off mode. I think longer term, we are clearly dependent on a reacceleration of economic growth. We've seen a number of stimulus measures taken across the world, including the US, and we think that if these prove to be effective, it could be very good for emerging markets. And finally, we're mindful of valuation. We continue to trade at significant discounts, both relative to history, but also relative to developed market peers. So there's always a valuation argument to be made as well.
As a portfolio manager, you travel quite a lot, and one of the companies that you have visited quite recently is Ivanhoe Mines. Tell us a bit about that.
Well, one of the things we look for in portfolio companies are companies that are masters of their own destiny. So what's unique about Ivanhoe Mines is that they have an enormous copper deposit in the Democratic Republic of Congo. We believe it will be one of the top 5 mines in the world, and these are very, very rare finds. If you look at the 20 largest producing copper mines in the world today, most of them were developed in the 1800s and early 1900s. And what we like about Ivanhoe is that they are fully equity financed to bring this mine into production, which means that as we near first sustainable production by the end of 2021, we should see some of those underlying values realized.
So fingers crossed for Ivanhoe then. Thank you very much, Fredrik, and thank you very much for watching.